What is Trending Thursday about? Trending Thursday is all about looking at what's going on in the news. What's the big headline story? Coronavirus, all right? We're going to spend some time on that, but I am going to spend a lot of time in the power of the VectorVest software. For those of you who are new, we do use a software called VectorVest, and I'm going to talk about a lot of the power of the VectorVest software and how we saved our customers in regards to prior to this big move to the downside. All right, so as you can see, everybody can talk to each other. Unlike what we have when we do the Jockey Club, everyone can talk. So Jay, make sure you don't cuss in the room. No cussing. And James says, give us a search for this bottom. That'll come at the right time. I'm not going to tell you a search. I don't know when the bottom is going to happen. I don't know when the bottom is going to happen. And so I'm not going to start talking about a bottom fishing search just quite yet. When it happens, we will definitely have that in store for you. So what we do every week is we get started with our market timing. Let's start off with the home page of the VectorVest software and what's going on. So from the home page, I got the wrong one up. Here we go. Here's the home page. And as you open it up, man, you can see that the market is getting crushed once again. All of the major indices are down. The Dow is down another 1,700 points, down 7.5% for the day. The NASDAQ down 6%. All the way across the board, everything is down in excess of 6% or more, to include the VectorVest composite. For those of you who are new, the VectorVest composite is an indexed arithmetic average of all of the stocks that we track. Currently, we track 8,225 stocks. All of these stocks are tracked in one ticker symbol known as the VVC, and currently the price of all of those stocks aggregate is at $39.33. We track this price on both the day-over-day and a week-over-week basis for the purposes of looking to see if the market is rising or if the market is falling. And today the price of the composite has fallen $2.86 to currently be trading at $39.33. So let me start off this way. Coronavirus is big. Coronavirus is not only affecting the United States, it's affecting the globe. And you're going to hear a lot about the doom and the gloom and, oh my gosh, the sky is falling. I'm here to tell you that as a VectorVest subscriber or as a trader in the market, stay focused. Stop putting your head on a swivel and looking this way and looking that way and getting this article or hearing this person and this channel and this newsletter. Stop. Just wait. Markets are going to do what markets are going to do, okay? Understand that we are in bear market territory right now, but markets go through bear markets. They go through bull markets and bear markets. We've been in an uninterrupted bull market since 2019 after the housing crash. So when you start to get into this panic mode, you start to invest emotionally. Once you do that, you're going to make mistakes time in and time out because you're going to try to catch the falling knife. When that happens, all you're doing is you're lessening the ability for you to make money in the market. Take what the market gives you. And this is why everyone in this room should have a trading plan. Your trading plan consists of three things: knowing when to buy, knowing what to buy, and knowing when to sell. Folks, if you can master those three things, I don't care what the market throws at you, you're going to be fine. Yes, we are in unprecedented territory. Yes, we are. And you know something? That's okay. Because as an informed investor, you're prepared whether the market goes up, down, sideways, in and out, up and whatever. So keep that in mind. Don't let the panic take hold of you and how you invest in the market. With the trading plan, you will not invest in an emotional state. Now, who's taking advantage of the current markets? The more aggressive traders. If you're more aggressive, you're taking advantage of the volatility in the market. When the market is up, you're buying stocks long. You're not holding stocks overnight. When the market's down, you sell stocks short. You're not holding stocks overnight. Why? Because the volatility is so whipsawish. That's a good word, isn't it, Joey? Mm-hmm. It's so whipsawish that you might be up today and down tomorrow. Up today, down tomorrow. That's not a good way to try to make money in the market. It's not only about making money in the market, it's about holding on to the money that you make in the market. So I want to put that out there. Instead of having everybody getting caught up in the quagmire of all of the hype and in all of the fear, sit back, understand that you have a plan. If you don't have a plan, then this is a time where you sit on the sidelines, you develop a plan, but you're not taking advantage of the market. Those people who are more prudent, who are swing traders, unless you're swing trading to the downside, just be careful. And those people who are longer term investors, if you're holding on to your retirement stocks, this is a time where options come to play. This is a time where you sell the covered calls on the stocks that you own. Why? Volatility is so high, you're going to get a really good premium for selling those calls. If you want full protection on a stock, buy a put. If you want to protect your portfolio, collar it, which means you buy a put, sell a call. And you do it on an index to collar your whole portfolio. It is a way to offset buying a put. So with all of that being said, folks, the news is the news. The market is the market. Don't let it run rampant in what you do. Have your plan, stay calm, and manage your trades. All right, with all of that, I wanted to get that off of my chest because I'm looking at feeds on Twitter and on Facebook and on CNBC, and man, just so many things going on. It could be a whirlwind of information or a whirlwind of data that you can't fathom and you get overwhelmed by. Don't let it overwhelm you. And a software like VectorVest will definitely help to keep you on the right side of whatever's going on. All right, so all my people who are brand new, who don't have the software, consider taking a trial. What's the trial special? Are we still running a trial special? Do you know?
Yeah, I think it's still mainly.
We're still running a trial for the VectorVest software for 30 days for 99 cents. Folks, it's $1. You can spend more at Starbucks than you can on having world-class software that'll help you to navigate through the troubling times that we're having right now. All right. So we talked about all of the major indices are down. We're talking about our color guard. Our color guard tracks 3 of our market timing indicators. The price of that VectorVest composite, which is the index arithmetic average of the 8,200 stocks that we have. RT, which looks at the short-term price trend of the market. Is the market in an uptrend or not? This indicator is cast on a scale between 0 and 2. Above 1, the market's in an uptrend. Below 1, the market's in a downtrend. And currently, we're at 0.50. Market's definitely in a downtrend. We have something called the BSR, or buy to sell ratio. Every stock in our database gets a buy, sell, or hold recommendation on every single day. We can definitely see we have 7,000 sell recommendations in the system compared to only 146 buys. This indicator is at a very low, historically low level right now. And then we have one indicator that looks at all 3 indicators in one, called the MTI, or underlying trend in the market, also cast on a scale between 0 and 2. Below 1 is unfavorable. Under 1, the underlying trend in the market is down. This is not a time to be buying stocks long. This is either a time to sit on the sidelines, buy puts, sell short, or buy contra ETFs. So people are asking me, what should they do now? That's one of the 4 things you can do. Sit on the sidelines, buy puts, sell stocks short, and or, what was my 4th one I just said? Sideline. That was the first one. Sit on the sideline, buy puts, sell short. Dagnabbit. I forgot what my 4th one was. Whatever, somebody's going to say it in the room, whatever it is. Dang it, I just said it. I just got so much stuff going on in my head. I got a lot going on. Sure. Oh, and contra ETFs, thank you. That was the 4th one. All right, with all of that being said, look at our top stocks right now. What are they? Contra ETFs. Look how much they're up just today. Look how much they're up just today. We're going to talk about that. I'm going to show you how to take advantage of what's currently going on in the market right now. So, even with the news of the coronavirus, okay, there's 3 things that move markets globally. 3 things, only 3 things. Earnings, interest, and inflation. Earnings are still up. All right, companies are still making money. Even though it's going up at a slower rate, companies are still making money. But companies are guiding lower for the next earnings session. All right, interest rates. Interest rates are now even lower than they were about a month ago. Why? Because the Fed is stepping in and they're trying to lower the interest rates to stymie or to build up the economy. All right, that's the Fed's job. The Fed's job is to make sure that people are working and to make sure that Interest is at a level, or to bolster up the economy, to make sure everything is good to go. We got jobs, and to make sure that inflation is intact. One of the tools that they use to do that is to lower or raise the inflation rate, the interest rates. Right now, looks like we're going to drop the interest rates again, possibly next week. And at that point in time, I don't know how much further lower we can go in case when the real recession kicks in. How do you know when it's a recession? After 2 quarters of the market going down or the economy going down, we then enter into a recession. We're on the precipice of doing that as of we speak, and it's going to be a global recession. And the last thing that moves markets are inflation rates. Inflation is still right where it needs to be. So given all of that information, the coronavirus is a story, but it has affected 2 of those things, and that's earnings, and it has affected interest rates as well. So I'm going to go to my first story. What did you just do? Say hi, Joey. Joey's messing up my stuff, though.
Well, you messed it up.
Oh, you messed it up. What?
Right here.
The BSR is at 0.02. Is that including inverse ETFs? And the answer to that is yes. That is why the buy to sell ratio will never get to a level of 0 because we have contra ETFs. All right, it will never get to a level of 0. And Don asked, what is RT? Relative timing? And the answer to that, Don, is yes, it is. Relative timing, which is one of our core proprietary indicators, and it looks to tell me if the market is in an uptrend or not. Is it too late to buy contras? No. All right, because with all of the panic that's going on, the market still has downside, and we're going to talk about that in a second. Should gold not go up now? Very good question, Ali, and that's one of my stories today, but let me tell you something. The direct correlation between the market going down and people running over to gold changed back in 2007, 2008. So that direct correlation is no longer there. Now, there will be days where gold goes up when the market goes down, but what you're noticing a lot, the market is going down and gold is going down as well because that direct correlation is not there like it used to be. So hopefully, Ali, that makes sense to you. We will talk about gold today, and I will talk a little bit more about that direct correlation. All right, let's get into the first story. Remember I talked about what the Fed's job is going to do and what the 3 things that move the markets are? Well, Fed, again, upsizes how much money it will lend to Wall Street. The whole idea of why the Fed is doing this is because the Fed is giving some sense of stimulus to the market. The central bank's expanded repo operations are designed to mitigate the risk of money market pressures. For the second time this week, the Federal Reserve Bank of New York increased the amount of temporary liquidity it was willing to provide to Wall Street's biggest banks, while also expanding how long banks can tap some of its funding. Next story, right in line with that, is the coronavirus. The coronavirus spread could halt the robust job gains. So people are making money, people are working. We've got some of the lowest unemployment rate ever. But now the coronavirus could affect the job gains. The Federal Reserve cut interest rates by 0.5% Tuesday in an effort to stem the economic impact of the coronavirus. Justin Lahart explains why the central bank can support the economy in the fight against the coronavirus, but can't lead it. So I'm a big fan of, yeah, it's okay to try to stem off what's going on with the coronavirus, but the cut in the interest rates can't cure it. It can help it. And, I think it's going to artificially help it. That's my own personal opinion, because the coronavirus, as it spreads more and more, I don't care how much we cut the interest rates, it's not going to be able to stop it totally. All right, so now I'm going to go back into the software, and I'm going to go back to our watch list that we created for this week. Where is that? Viewers, let's go to the watch list viewer. Go to YouTube, Trending Thursday. Let's go find 312, which is today. Here's the stocks that we're going to talk about today. I want you to notice something. In the watch list, everything is either a sell or a hold. That is a direct correlation of what's going on in the market. All right, so the two indicators that we look at to see what the market is doing is our VectorVest composite, which is that indexed arithmetic average of all of the stocks in the market. And for those of you who are not subscribers, a lot of you will look at the spiders or the S&P 500. All right, if we look at them, both of them are sell recommendations. Let's just go straight to the graphs. I'm going to right-click, view the stock graph, and let's take a look. This is that VectorVest composite. This is something that I want to show to the people who are not subscribers to the VectorVest software. I'm going to take off something. Where's my earnings per share? And where's my volume? I'm going to take that off too. This is that VectorVest composite. And where's the moving average volume? There we go. Here's that VectorVest composite. Here's the big scare of coronavirus. Last couple of weeks, look at the precipitous fall in the market. If I can tell you that we could have protected you throughout all of this for all of our people who are non-subscribers, let me show you something. I'm going to put on that MTI, which is looking at the underlying trend of the market. Let me go add a parameter, capital appreciation. Is it already on my list? I know why. Let's do this a different way. Let's make this a market timing graph. There we go. Now I can put on the MTI. All right, there's that underlying trend of the market. It does two things for me. One, when that MTI gets to a level of about 1.5, as you can see back here, when it gets to that level of about 1.5, the market is looking for a top. See back here where it did in 2019, April of 2019, what did the market do? It fell. All right, it never got to a top. What did the market do? And again, what did the market do? Move sideways. We got to a level of a top as the market was rising. Market kept rising. That MTI, number two thing it can do, it provided for us a bearish divergence where the market was moving up and the MTI was moving down. How about that? How about in the VectorVest Views, our nightly newsletter on 2/21, we told our subscribers they shouldn't be buying stocks anymore. That was on 2/21. Not only that, the primary wave of the market went down. Would you have rather gotten out on 2/21 or been riding the market all the way down? Now, for anybody in the room, and I'm going to get people who are going to say this, for anybody in the room says, man, this is hindsight. Hindsight is 20/20. Absolutely. Joey, put my type up for a second. Put my chat up for a second. I want everybody in the room to answer this question who's a VectorVest subscriber. How many people did this information save? Type a me in the room. And I want all of the VectorVest subscribers in the room to answer honestly. How many people did this information, as it was going on, how many people did it help to get out of the market prior to the market going down? And folks, I don't want you to listen to me in this. I want you to listen to the VectorVest subscribers who are in this room. And for those that say not me, that's all right, because you know something? I'm going to have a lot more me's than not me's. And the reason why I'm going to have the not me's, a lot of times, folks, we give you this information as it's happening. It's up to you to have the confidence, folks. It's up to you to have the confidence to listen to the guidance that we give. 2/21 in the views, we said not to buy stocks. Not only that, we had the bearish divergence in the market. Not only that, the biggest strategies that were making money in the market at that time were contra ETFs. Folks, we give it to you. It's up to you to whether use it or not use it. I can't make you. You ever heard this statement? You can take a horse to water, but you can't make him drink. We can give you the information, but it's up to you to use it. And then look at the people who said me. Look at the people who said me compared to the people that said not me. All right? And folks, that is it in a nutshell. That is the power of the software. We give you information every single night, and we prepare you. And there's nothing that anybody can tell me that we didn't do to not prepare you, folks. We did it. And for anybody who's saying this is hindsight, yeah, no. It was now sight at that time. And I will stand behind that 150,000%. And look at, all you got to do is look at the names in there that said me. Just look at the names in there that said me. And for the ones that didn't say me or said not me, again, all I can do is make sure that we provide you with the information. All right, with that being said, there's the market timing graph. This is what's going on. We're falling. We're still falling. Let's go look at my other indicator I wanted to look at, which was the spiders, SPY, S&P 500. Same kind of scenario. It is just falling. Look at the big wick today. Big selling pressure on today's candle. Not a lot of buying pressure. Down day, gap down, still falling. That's it in a nutshell. So someone asked me, well, where is the bottom? Well, let's go put this on a 1-year graph. Let's go put this on a 5-year graph. The last bottom that we had was back in 2018. This was back on December 24th of 2018. Here's that low. Where did we fall? Right to that level of support of $39.17. Where are we at, folks? Holy smokes. Right at that level right now. Tom, type it in the room. This is why we use things like support and resistance. Where are we right now? We fell right to that previous level of support, which was a big down period back in 2018. Could this be the bottom? Don't know. I'm not calling it. I will not call the bottom, but I will say that right now we are at a pivotal level of support in the market by way of the VectorVest composite. Take it as you will. I will show you how to try to make money in this market the way we are right now. So that is what's going on in the market. And what I'm going to do is I'm going to take that off. Let me see. Joey's trying to show me something. Victor says, also, is this information for long-term trading, dividend investing, or is this for day trading option swing? So now, from the idea of a long-term investor, we have a market timing call for you. It's called the confirmed calls. The last confirmed down call, let's go zoom in a little bit. The last confirmed down call was on, I'm on a weekly graph. Let me go change that to end of day, 3 months. The last confirmed down call was on 2/28 of 2020. Was that a good opportunity for those people who were investing long-term to get out of the market? The answer to that is yes. All right, what are you waiting for? You're waiting for the confirmed call to move up. It is the slowest, most conservative timing call we have. For those people who are longer-term investors, this is what you're looking for. All right, this is what you're looking for. You're looking for the green arrow moving up for those people who are a little bit more conservative in the market. What do you do with your long positions if you're retirement minded? This is where you start putting on your covered calls, buying your puts, putting on your collars, because these are stocks that you don't want to get rid of. So you protect them the best way that you can. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.